Well, happy Monday. It's May 8th. Wanted to bring you up to speed with the latest data here in the Austin market. Wanted to start with this article right here. This came out through Bigger Pockets. The title is Home Prices Rose in 93% of the 100 largest housing markets. Is the correction ending? Well, hang on. We'll get to some Austin data in here. So this is based on the S&P Case-Shiller U.S. Home Price Index. They studied February to March, looking at data. This is looking at the top 100 markets. Well, which ones are on the rise? Ohio, Connecticut, Massachusetts, Ohio. So pretty much the Midwest and parts of the Northeast. Generally, places that did not have as big of a run up during the pandemic are continuing to see low supply. And that's because the prices are very affordable. It's helping to continue their upward trend. However, here are the bottom 10 markets based in that index. Austin, Texas, number one. We saw a decrease from February to March, month over month. Who else? Provo, Utah, Boise, Idaho, Salt Lake City. We got San Antonio, Dallas, and Houston in there, a city in Florida. So again, these were some of the markets that saw some of the biggest upswing during the pandemic. Austin being one of the top two, along with Boise, Idaho. And look who's top three on the list, Austin and Boise, Idaho. So, you know, what happened is obviously just like pandemic stocks in the stock market that got overinflated, some of these housing markets got overinflated too. And we are correcting back to the median. And I'll show you some of that data. We might be getting close to that. And I'll show you that in a quick second. But I thought that was interesting to share. On a national level, it's not equal. There is no national housing market. There's individual submarkets. And even inside of Austin, you may have different data depending on neighborhoods and zip codes and price points. So thought that was interesting. Let's look at this data here. Here's a couple charts I pulled just a minute ago. So on the left, we have the historic price trend. So this is looking 12 months. So we have June of last summer to May right now. Last summer, obviously, we were already on the down cycle from the peak in May. And we started to see the median home price really correct hard through September and October. That's when interest rates kind of peaked out over 7%. We got through the winter. It stayed soft. By February, we had come down to about 450 on median home price. We have seen a little bump. We've gone from 450 to about 465 from February to April. Some of that spring seasonality coming back to the market. It's too early to know. We see it slide back down again in May, but again, it's only May 8th. So this is only counting closings from May 1st to 8th. That's just not enough data. So we'll see where that ends up for that month. But again, we're just kind of barely bouncing off the lows and starting to see if we're going to find a level there. Here on the right-hand side, this is the number of active versus sold listings. Your green are active properties. Again, looking at 12 months. This is last fall when like nobody was buying in mass. The numbers of buyers really dropped off. And of course, interest rates spiked around here over 7%. It just crushed buyer demand, on top of it normally being seasonally a slow time of year. So we had listings really pile up, but over the winter, a lot of sellers took those properties off the market, and we had some buyers come in late in the year and start buying again. Interest rates went into the sevens, back down into the mid to low sixes. That helped, again, give us a little bounce as we head into this spring market. And you've seen, here we are. Normally, this would be a down and then an up, and we're not really seeing that. We're kind of seeing, again, number of listings kind of trend sideways, but sales have still remained pretty weak. Pendings are down year over year by about 25%. And we're seeing that in the numbers. Don't judge May yet, still too early. But right now, May and April, kind of similar in terms of number of listings. Here is the MLS. I'm going to bring you the homepage right now. So this is the last 7 days of activity. We had 1,000 new listings hit the market. Price decrease still going up. So every week we're seeing this number go up. That's 1,239 properties, single family residential properties, lowered their price just in the last week. We have about 9,000 listings. So you're probably looking at 16% of listings in 1 week adjusted their price. Price increase, I don't really look at that. Most of the time that's new home builders adjusting their prices. We have roughly a little less than 1,000 pendings under contract. and we did have about 800 closed sales. So again, 800 times 4 roughly is going to give you what a month of sales may look like, maybe up to 3,000 homes, but you have 9,000 on the market. I think we're probably still trending around 4 months of inventory there. Finally, wanted to get to mortgage rates. So obviously the Federal Reserve last week raised their Fed funds rate by 25%, but how has that impacted the bond market, which impacts mortgage rates? So far, they're kind of where they were before. So we're trending for most of the products out there in the mid sixes. 30-year fixed is still around 6.5%. Here's some of the headlines. This is coming from Mortgage News Daily. So mortgage-backed security prices Monday morning right now, they're significantly weaker, which means people aren't interested in that yield. When they don't buy the mortgage-backed securities, that means I want more return. So when they don't buy them, they want the price to go down, which makes the yield go up. So mortgage rates could go up a little bit, but it's volatile right now. This changes daily. And then in terms of headlines, lots of movement, not a lot of progress, and of course, more volatility ahead. I think that's been the story for the past 12 months, is the volatility of everything. We're still in that cycle. You can talk to 10 different people. They're going to give you 10 different responses. If we're going into recession, if we're not going into a recession, is the housing market going to go up, sideways, or down? Really hard to say. I can tell you in the short window, as long as these interest rates right here stay about where they are, I think for May and for June, I think we're going to have an okay sales market. If we follow seasonal patterns, what's going to happen is we're going to have a decent May and June, and it will slow down when we get to July and August. It always does. It gets to be 100 degrees. People go on vacation. And more importantly, if buyers and families, they wanted a house for the summer, they needed to have bought that house in April, May, or June, so they could enjoy the house in the summer, move in the summer. If you wait till July or August to write a contract, odds are you're not closing until late August or September. And by then you're already back in the school year and starting. So that's one of the reasons it slows down later in the summer. So something to pay attention to. Anyways, I hope this is helpful. This is just a high level look at data today on May 8th. If you want to follow all of our videos, check out Ryan Kelly Group on YouTube. And until then, hope you guys have a great week.